Welcome to the first video of FX Jers Mentorship Academy. If you've ever felt lost while analyzing the markets, struggling to understand why price moves the way it does, this video will change that. Today, we're diving deep into market structure, the backbone of all price action. Mastering this will give you the confidence to trade with clarity and precision, instead of guessing and hoping. Now, let's first focus on the bullish scenario. The market moves in an uptrend by making higher highs and higher lows, continuously forming demand zones where buyers step in. But before entering at these demand zones, we need to see a break of structure to the upside. As you can see in the diagram, the market is creating demand zones, and each time price returns to these levels, buyers push it higher. The break of structure confirms bullish momentum, giving us a high probability buying opportunity. In a downtrend, the market forms lower highs and lower lows, continuously creating supply zones where price reacts and continues dropping. As you can see in the diagram, price keeps breaking previous lows, confirming bearish momentum. But before looking for sell opportunities, we need to see a break of structure to the downside, which confirms that the market is maintaining its bearish flow. Once the break of structure happens, price often retraces back to a supply zone, giving us the ideal entry for catching the next move down. Now, the third scenario is consolidation. As you can see in the diagram, the market is creating highs and lows, but isn't giving a break of structure to the upside or downside. Instead, price keeps moving within a range, forming what's known as a liquidity pool. This is where many traders get trapped, buying at the highs and selling at the lows, only for the market to later break out and wipe them out. Market makers use these zones to collect liquidity before making their actual move. But here's the thing: successful traders don't chase trades. They wait for the market to show its hand. If you enter too soon without a clear breakout, you're just gambling. Patience is a skill, and mastering it is what separates the average trader from the consistently profitable one. In this scenario, we don't take trades. Instead, we wait patiently for the market to break out, either to the upside or downside, before looking for an opportunity. Trading isn't about taking every trade, it's about taking the right trade at the right time. If you can learn to sit on your hands and wait for the perfect setup, you're already ahead of 90% of traders out there. So, don't fall for the trap. Let the market come to you. Now, let's focus again on the bullish scenario to get a clearer understanding. As you can see in the diagram, the market is forming higher highs and higher lows, confirming an uptrend. I have marked 3 demand zones where price reacted and buyers stepped in. Next, I have marked the break of structures to the upside, indicating bullish continuation. After that, I have encircled the buying entry points within our demand zones to help you see where entries can be taken. I have also encircled the highs where potential sell trades could be taken back down to the demand zones, followed by buying opportunities once price reaches these levels. This helps in understanding how price moves within an uptrend and where possible trade setups can be identified. Now, let's focus on the bearish scenario. As you can see in the diagram, the market is forming lower lows and lower highs, confirming a downtrend. I have marked 3 supply zones where price reacted and sellers took control. Next, I have marked the break of structures to the downside, indicating bearish continuation. After that, I have encircled the lower highs, which act as entry points within our supply zones to help you understand where trades can be taken. I have also encircled the lows where potential buy trades could be taken back up to the supply zones, followed by sell opportunities once price reaches these levels. Buying from the lows is something we will discuss in upcoming videos, so stay patient and follow the process. Now, let's focus on the consolidation scenario, where the market moves sideways. As you can see in the diagram, The market is neither making higher highs and higher lows, nor lower highs and lower lows. Instead, price is moving within a defined range, creating equal highs and equal lows. In this phase, the market is building liquidity on both sides, trapping traders who enter too early. Since there is no clear trend direction, we do not take trades within this range.
हे एवरीवन, सो इफ़ आपको कोई भी कोर्स चाहिए कोई भी मार्केट के रिलेटेड तो आप मुझे मैसेज कर सकते हो. मेरा टेलीग्राम आईडी है दी जेसी कोर्सेस. यहाँ पे आपको सब टाइप के कोर्सेस मिल जाएंगे, स्पेशली स्टॉक मार्केट के कोर्सेस. सो ये मेरा ओरिजिनल आईडी है, ओरिजिनल सेलर हूँ, ट्रस्टेड सेलर हूँ. यहाँ पे मेरे पास 2000 से ज़्यादा कस्टमर्स हैं जिन्होंने मुझसे कोर्स लिया है. सो आप ट्रस्ट कर सकते हो. मैं आपको पेमेंट के पहले प्रूफ दूंगा तभी आपको कोर्स दूंगा. ठीक है, कोई टेंशन लेने की ज़रूरत नहीं है. कोई भी कोर्स चाहिए होगा मुझे मैसेज करो. बाकी सब सेलर्स मुझसे ही लेते हैं. सो आप डायरेक्ट होल सेलर से ले लो, सस्ते में वो भी.